The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All righty, folks, welcome on back here to the Diagnostic Trading Hour. I hope you are having a fantastic day. Markets are flying all over the place, and was up late last night and watching the indices just crash on down. And I mean, they were moving massive and then popping back up and then just, all around here. So let's see where everything's at right now. We got oil right now is down $1.64. Dollar index currently down 0.239. We got the S&P is currently down 19 points on the day. We got on over at gold, it's down 10 points right now. Going to Russell, it's currently down 11 points. Dow down 162. When I was watching the Nasdaq last night and writing that thing down, that was just flying, and it was fantastic. About 4 a.m., cut it off, said, okay, that's enough, 5 a.m. Eastern time. But the NASDAQ, I mean, right now, let's see, where is that at? I typed in the number, but it's showing up wrong, and I'm like, what's going on? Okay. And, okay, so NASDAQ back down 38 points. Go back down to 44.89 after flying on back up. And so pretty, like I said, just insane, massive moves today on these indices. And I mean, we'll pull some charts. We'll look at things. Going on bonds here, up entire like 1.06. So bond market really what caused all the stir last night, by the way, making things crash down. And sort of a yields rising across the board massively. So there's a lot of stories out there, but that's really the main story is like the Euro bonds and everything else. And I think I saw a couple of them pop up here and there, but they were the sort of the main issue. And let's see, Kurata, Bank of Japan says excessive yen strength has now corrected. But let's see, Greek Finance Ministry asks creditors to immediately move to more realistic proposals. So obviously that's breaking down. So let's see, there's a question over here. Was the Fed Q1 slow or not? But let's see, they sort of slipped in the background. But the real issue, I just want to see if they still have these on here. They just let them fall off. But the bond market's falling apart last night is what really, there we go. Euro surges again as bond yields continue to rise. So, but anyway, so a lot of this bond movement that are moving things everywhere. Let's go ahead and look at our commodities up a little bit. We got corn up 4.5 points. We got soybeans up 11.5. Going on into the Aussie yen down 94. Aussie dollar is down 97. We got the euro pound down 15. Euro yen up 50. Euro dollar is currently up 16. Pound yen up 109 pips. Went over the pound dollar, it's up 52. And dollar CAD is up 21. Dollar franc just up a few pips, and US yen is up 27 pips on the day. With some of the news that came out this morning, dollar was falling. Obviously, just due to everything that's been coming out. But let's see here if I can. Yeah, still going down. Obviously, some attributing it to declining U.S. productivity. He's like, yeah, definitely would say that's true too. But bonds being the big issue here of what's really moving the stock. So it's not just a productivity thing, especially considering the fact that it was moving well before that news announcement came out. So that's one thing to keep in mind as you see these news announcements is that really the reason that the dollar was moving, or did it happen before, that or whatever announcement that it may be that they happen to be commenting on, or somebody maybe be commenting on in a news story. Like, hey, this falls, this happened. And it's like, okay, so that's what caused it? No, let's go back and look. Oh, wow, that was moving way before that announcement ever came out. So sometimes you'll actually see the opposite. You'll actually see that there'll be a recovery when the announcement comes out, the opposite of what the story implied. and things will flip back around. And so that'll basically, like, it'll pop up for a little bit, and then they'll flip back around and go the other way. So, don't just use all the headlines. Make sure to double check and see, does that actually line up with what they're saying? We had gold futures, extending a lot there too. But let's just pull up the dollar index. I want to go over this with you and show you, so you get this, because it's sort of funny whenever you watch some of these headlines and then you look at what's really going on. Deviation, and we'll pull up deviation levels. There we go. And we'll fly through some of these charts and look at them. But as you can see, let me make the bars a little more legible. And we were down a deviation and a half before any of that news even came out. Then the news came on back. Then the market literally rallied back a full deviation and a half, okay, going into the open of the U.S. session. And then it pulled back another deviation from high to low at that same point. And then now it's back up to about 0.5. So, I mean, just incredible movement, clean movement, allowing for the ability to really take advantage of some massive trends. So I hope some of y'all got some of that. I know some of you maybe, I was talking to a couple traders last night. Finally, we're like, we got to go to bed. And so, but, I mean, if, that was about the right time, about 5 o'clock in the morning, 4 a.m. Central. That was definitely the right time to check out, because things sort of went choppy while they were turning, and then they flew on back up. And here we go, right there. You can see the deviation's a little bit clearer now. But came on down, deviation and a half up to settlement. And so all of this was happening really before any U.S. announcements were coming out, as they're trying to give credit over here to the unemployment claims or productivity reports, or, whatever it is that they want to try to, pin it on. It's the bonds. So let's see here. Now, some of the things that I want to talk to you about too, got some other stuff I want you to look at, but you can really take advantage of premium when stuff like this happens. Okay? Massively take advantage of premium. And we're going to look at that here in just a moment. Let's go ahead and roll on over, and we'll look at, let's see, we already talked about that. Let's look at, we'll do NASDAQ last. Talk about dollar index. Let's go look at gold real quick. And on the gold chart over here, I haven't traded gold in a few days, so I've been so much on some of the indices and dollar index and bonds. And once this loads up, we'll pull it up there, and we'll go into oil. We'll talk about natural gas. And see, told you I hadn't traded in a couple days. Need to roll it on over. Let's see here. A more liquid month. And yeah, it's just not going to load up right now on that, but that's fine. We can come back to it, but I mean, you can just see this nice, massive decline happening this morning. So we really didn't get the movement on gold last night near as much. Back out some. But we got that drop like right at around noon yesterday, and then it went pretty flat and choppy. But then this morning, I mean, it definitely dropped. It was a choppy trend drop. So, I mean, it was doing some pretty big swings, 4 or 5 point swings in the process. But lots of movement in there that you could have taken advantage of. If we go on over, let's look at oil. We'll check oil out. See what we got there. And we'll make sure we cover our news. Then we're going to go back and talk about spreads a little bit. And we're talking about premium collection on those. A little bit about iron condors. And try to help you understand how they work. So I've been going over them some of my radio shows lately. And I want you to really be able to grasp what's going on with them and the different pieces that you can put together to take advantage of how the spreads, how the iron condors work. And I mean, last night there was literally 15 points, and I'm not kidding you at all, 15 points of premium on the charts. So oil right there moving. Now that was a pretty nice smooth trend. Had a couple little pullbacks in there, but a pretty nice smooth trend for a solid couple points move in that entire chart. All right, now let's go ahead and let's hop on over to the spreads. Look at the spread scanner. Okay. We'll scrolling down here. Let me pull up. I'm gonna look at two things real quick. Make sure I'm on the right. Yeah, I was on the right one. Okay. Okay, so looking on over here at NASDAQ. And there's several different ways to look at premium and how it works. To help you out on the current scanner and how you put that together, we basically need to know where the market is currently priced at. So you can just look at this and tell it right there in the center, and we can go and find. We don't want to find a really low premium spread. Notice there really aren't any at the moment. Like the closest we're getting is like 23 ticks. So there's a lot of premium in the market as a whole right now, and that can make it a little more challenging when you're trying to trade them if you don't know how to take advantage of it. So if you're trying to be directional, you can have not only direction on your side, but you can also have premium on your side. So obviously it's sort of nice to have both of those going in your favor. And let me pull up the US Tech. I'm going to break it down a little bit more for you. Okay. Once I get that opening up, here we go. All right. So looking at this and looking at where the market's at right now is at 44.84. Okay, right there at 44.84, which I'm really shocked we dropped all the way back down to that. So what is premium? This is the one thing that I think traders really can get stuck on, is what premium is. Premium is the time and expected movement value, okay? The time and expected movement value in a specific option, okay? And let me see here. I'm going to update this. All right, so it's the time and expected movement value in a specific option. Well, what does that mean? Like, that sounds really, really complex. When we come back, we're going to go to it specifically, and you should hopefully understand premium before this show is over. Stay right there. We'll be back right after this break.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Darrell Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, folks, we'll come back here to the Diagnostic Trading Hour. And what we're talking about today is we're sort of trying to dive in to these spreads and make sure that you understand them and how they work. And so what I want you to get is we're really focusing on this premium. That's our big major topic of the day. Okay? If we were talking normal options, the word I would use for that would be extrinsic value. Okay? So again, extrinsic value would be the main, would really be the word. Meaning it's just all time value. So if I went in to buy, let's see here, trying to find one that's even in the money down here. Here we go. That one's out of the money. There we go. There's an in the money one. To buy this spread right here, this option would be basically like buying a 44.75 call. Okay? If I bought it at 44.85, which is the current offer price, then I'm buying it pretty much, quite a bit higher than where the market is. I'm buying it 5 points higher. See, the market up here is at 44.80. Okay? So again, the market's at 44.80. I'm trying to get this on the best zoom for you. 44.80 right there. So we got 44.85, and the market's at 44.80. So I'm buying 5 points higher than where the market's actually currently trading. Okay? So I'm paying 5 points, which 1 point on a U.S. Tech 100 spread on Nadex, okay, the option there, is worth $10. It's $1 a tick, and it ticks in dimes. 10 dimes and $1, okay? So that's 10 ticks a point or $1. Every tick is worth $1, so $10 a point. If we're buying at 5 points higher than the market, then that is basically going to result in us paying 5 points of premium. So I see right here how it's displaying premium of $53. Okay? So what's another way to look at this? Because I want to say this in several ways. Hopefully my goal is that the light bulb clicks. If you went to buy the NASDAQ right now, and is it priced at 44.80, okay, and you put in a buy at 44.85 and you got filled at 44.85, you'd be down 5 points immediately, right? Okay? Like, I mean, you literally be down 5 points, like, out of the gate. Does that mean you're down 5 points on premium? No, but just hold on to the idea for a second, okay? If you went in and the NASDAQ was priced at 44.80 and you went in and you bought it at 44.85, you're basically at a 5 point loss. Okay, so poof, money gone. Okay? So you'd be very upset about that fill. And you'd be wondering why, as the market's moving in your favor, why am I not seeming to make anything? Because you bought 5 points lower than the market. So it's going to have to move quite a bit before you 5 points before you see a profit. Now, that is the scenario if you bought a spread. Now, this is really key, okay, because otherwise you're going to get confused. If you bought a spread or bought an option, whatever, with 5 points of premium in it, and at expiration, this is the big, like, at expiration capital letters, okay? If at expiration, in this case 415, the market was still at 44.80 and you bought at 44.85, you'd be down 5 points at expiration. Okay? So that's what premium is. It's that time value. Now, time value doesn't just poof go away. It's not actually like getting a fill at 44.85 and then the market's at 44.80, okay? In the sense of it's time value. It decays over time. So if it decays over time, is there, a way I can help illustrate that to you? Yes. Let's look at these spreads right here. Look at this spread right here. Okay, 44.90 to 4,500. This one is also 44.90 to 4,500. Look at the premium on the one that expires in 30 minutes is $11, and the one that expires in an hour and 30 minutes is $23. We'll come back to that in just a moment.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's hard to believe that it's been almost 2 years since Andy Hecht started his newsletter, the Technomental Commodity Report. In that time, he's delivered many winning trades for his subscribers. To commemorate Andy's 100th weekly issue of his newsletter, we're rolling back the monthly price to the introductory rate of only $59. This is a one-of-a-kind special that is only around until Thursday of this week, which is the day of his 100th issue. By taking advantage of this 100th issue special, you can lock in Andy's original introductory rate for as long as you remain a subscriber. That's an incredible 25% savings every month off the retail price. Andy delivers in-depth analysis of the commodity market every Thursday in each issue of the Technomental Commodity Report, while providing specific trading recommendations on ETFs and option positions within the commodity market. Don't miss out on this special, as there are only hours remaining. Sign up for the Technomental Commodity Report right now at the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back here to the Diagnostic Trading Hour. And again, we're going over premium in spreads. We're talking about what is premium. Premium is the additional value that can be found in an option. It's the time value. And the mathematical formula for simply calculating the premium is if a spread is out of the money, the maximum risk is the premium. What does out of the money mean? It means the market, like right now, is at 44.79. Means the market is lower than the floor. So on a buy out of the money, the indicative, the market, the Nasdaq is lower than 44.90. So the premium is the maximum risk because it's all time value. It's all extrinsic value. There's no intrinsic value in that spread. Okay. If we go over here, we'll see that, it's at 44.90.8. The market's at 44.90. That's a 0.8 risk. Every ticket's worth $1. It's $8 in risk, $8 in premium. Now, what I want you to notice where we left off on the last segment there is this has the same floor, 44.90. This has the same floor, 44.90. Okay? And I want you to look at the expiration time. We got 24 minutes. We have an hour and 24 minutes, and we have 2 hours and 40 minutes. They all had the same floor. Sort of buying, like a call strike, a 44.90. Okay, but they all have different expiration times. So this one is at 44.90.7. $7 of risk, all extrinsic premium value, $7. This one, 44.90, it has an hour. It has another hour on it. So there's actually more premium, 44.92. There's $20 of risk versus 7. That's more time, more premium value. This one down here, $44 of risk. It's priced at 44.94.4, 44 ticks above the floor, 44.90. Okay, so a little over $4 in time value. Notice how the premium goes up the further away you get from expiration. Okay, so the more time there is in there, the more the premium cost. Just think of it like car insurance. It would cost you more to pay for 6 months of car insurance than it would for 3 months of car insurance. It costs you to pay more for 1 month of car insurance than 3 months of car insurance. More premium because there's more time that you're, in essence, covered. Okay? So that's car insurance right there, is a way to put it. Or premium, or, I mean, there's 100 different words you can use. I'm just trying to use a bunch of different ones so that way, hopefully, one of these clicks with you. Okay? So by now you should understand that if it's out of the money, okay, so on a buy, that means the market's lower than the floor. Or on a sell, that means the market's higher than the ceiling. Okay, we don't have any out of the money today on the sell side with NASDAQ. But then the premium is the maximum risk. If it's out of the money, the premium is the maximum risk. It's all-time value. If it's deep in the money, if we flip it upside down, if it's deep in the money, then the premium is the maximum reward. What does deep in the money mean? Okay, deep in the money means that it's a sell. You're selling it. So see DITM, deep in the money? You're selling it and the market's below the floor. And most of these are deep in the money today. So it's already fallen below the floor on them. So you're selling it, and the premium is the maximum profit. Now notice, before I used the word maximum risk, which means we were risking the money. Okay, on the premium in the sense of if the market didn't move, we would lose that premium as of expiration. Well, now I'm using the word profit. So if you went in and you sold this contract, okay, now the most you can make is an issue where you sell in the floor. Okay, so if I sold at 44.94.9, or let's say 95, make it easy, 44.95, and the floor is 44.90, the most I can make is 5 points of premium on this trade. Okay, cannot make any more than that. That's the most I'm going to be able to put in my pocket, 5 points, because it doesn't get bigger than that. Okay, it caps out. It's sort of like think about a vertical spread if you're an option trader. Okay, there's so much there's so much at risk, and there's so much that can be made. And this is very similar pricing model. Okay, so if you're not, don't worry about that. But if I sell 5 points higher than the market, and the market stays flat, I make 5 points. I collect the time value, the premium, the $50 right there. Okay. So if you sold this right now for $44.95 and the market, I mean, look how far away the market is at $44.82, 15 points away. Okay. Then you get to keep the $54 if that thing expires at $44.90 or less. Okay. So you're talking about a pretty deep in the money, hence DITM, deep in the money spread, that is, very far away from where the market's currently trading, and has a very, a good profit on it. And that's 51 right there. It says it's 50. That's not dollars. That's NASDAQ NQ. So 0.25 ticks right there. So that's a lot of ticks. 4 ticks a point on NASDAQ. It's NASDAQ ticks in quarters. Okay. Then, I mean, you're looking at, 12, 13 points in the money right there. So, I mean, that's a massive difference. 44.95 versus 44.82, and it can't go lower than 44.90. I mean, if the market could move up 8 points, in essence, 7.5 points right now from where it's at, and you'd keep all $50 on the trade. mean, that's pretty nice. Keep $50. If you sell and the market goes up 8 points, because you sold at $44.95 and you get max profit at $44.90 or less. Now, what if it goes up to $44.90.1? Do you lose like a binary? No. You actually, instead of making, say, $50, if you sold at $44.95, you'd make $49 as of expiration. Okay? So still not that bad of a deal. Okay? So you can go in there and you could say, I think the market's going to keep going down. And you sell, and the market goes down, well, you're going to make your $50. The market stays flat, you're going to make your $50. The market goes up 8 points, you're still in the wrong direction from what you said. You're still going to make your $50 because it's premium. It's time value. Okay? And you get to put that in your pocket. And you'll make $1 less for every tick dime above $44.90 until it gets up to where you sold, say, at $44.95. Then you'll be at break even. And then what if it expires at $44.90? What if I sold at $44.95 and it expires at $44.95.1? I'll be down $1. It's not an all or nothing like a binary. It's $1 a tick. So we got this time value. You can be paying it or you can be making it. Which one do you want to do? Okay? So if you're trying to trade directionally, I mean, it'd be pretty tough to be paying all that time value right now. And, as an example, I went in, and here's just a few trades from my account right here. They're currently open. And I went in here, and I sold these contracts right there. But I sold at 45.03. And I've sold this one at 45.06, like 15 points higher than where the market was at that point. So right now it's even higher than that. So we got 18 plus, I guess 6 more, 24 points higher, 23 points higher than the market before I could even lose $1 at expiration here in the next couple hours. And so on those trades, what will I make when they expire? Well, it's 45.03. 44.90, so we got $130 times 5 on that one right there. Okay, so 500 and then basically 30 times 105, another 150, so 650. So I'll make like 650 on that one. Or no, not 650. Here, let's just pull up a fun little calculator. I had it all figured out last night. It's all written down on the plan, but just to show you how to walk through it. 4503.1 minus 44.90. So $130, $131 times 5. Okay, so we'll bring in $655 on that one. Okay. And then on the one below it, down here for 90. Let's see, we sold at 45.06. Those are just the only ones I have left. Other ones have been closed out. 44.90. 16.1, so 161. So just on those two little trades where I'm just sitting back and letting time decay away, I'll make $816. I'm not watching every tick of the market. I'm not stressing out. Okay? I'm chilling out. I mean, the market had to get up to 45.03. I want him 45.06 on the other one at this point. And at that point, it'd be at break even. And then it's only $1 a tick after that. I don't need to stress out. Okay? I mean, this is premium collection at its finest. If you've been trying to do premium collection on binaries, which is great and I love, but this is like that times 100, like for you personally. Psychologically, it's better. Okay? It's easier to trade. It's a lot less stress, and you can make a lot more. Now, one thing I was talking to a trader last night, and he thought like they were capped at 100 because he keeps you got to drop that binary mentality. Okay, so if you think this is like binaries, just drop binaries completely. Act like you know nothing and relearn. Okay, because you're going to make some false conclusions when you try to do your math. Spreads can be up to 1,000 points wide, $1,000 wide. Okay, 1,000 ticks there. Like on oil, there are spreads that are 1,000 ticks wide. So $1,000 in value, not 100, like a binary, but up to 1,000. Now, that could be 70, be 100, 150. I mean, there's all different sizes, okay? The spread is just the difference between the floor and the ceiling. But first, get rid of that $100, thing, and understand that could be 1,000. Understand your maximum profit when you sell is down to the floor. Your maximum profit when you buy is up to the ceiling, okay? So looking at those trades, understanding, okay, so what I did was I collected premium. That was like $120, $130, $150 whenever I sold. Now it's like at 40 because the time has been sucked out of the option. So, I mean, we're going to make, like I said, I'll make $816 on those remaining contracts, but we're already, let's see, $550 right now. And that's time value. Okay? That's it. Just simple time value. So notice I can only make $1 on this one if I sell it. There's only 12 minutes left. Not really going to be worth it, considering fees are like $1.80 round turn. Okay. Right here, I can only make 12. Right here, I can make 38. And there are some that pay even more. Okay. Now, hopefully you got the idea that premium is time value. So as time passes, premium will decline. Okay. It's also implied volatility value, which means expected movement. So, and part of that factors into time. If you think about it, if there's less time, then there's less expected movement in most cases. The exception would be like before news comes out. This is why, like, if you look at Google options or something like that, right before news comes out, the options will be really expensive. But after the earnings comes out, okay, so sorry, earnings. Right before earnings come out, the options will be really expensive. And then the earnings come out, and then all of a sudden it's called a volatility crush. That's IV drops because the expected movement has happened and it drops down. Okay, so often you'll see premium go really high before news, and then after the news, especially if it's a non-event, boom, it'll drop down, and you can make money just on the drop in expectation of movement. Okay, so we got time, we have expected movement, okay, which obviously is part of time, and we can either make the premium or pay the premium. Normally, you can get premium on both sides. Like over here, here's one where you can make $12 on this side. It's just right now they've moved so far that most of them are either out of the money on one side, deep in the money on the other. Okay? So, now, which one would you choose? If you're going to choose one, and let's say we're going to go out here, we're going to focus on these 415s, okay? Well, all these are making, these three right here, pardon me, are making about the same amount of money. Okay? I mean, they're pretty much right on, within like $1 or $2. So, if they're within just a couple bucks of each other, we'll just say they're all $35 to make it easy. Okay? But if they're within a couple dollars of each other, then how do you know which contract you're going to choose? We'll talk about that when we get back, right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Okay, so all things being equal, let's say we're looking at just 415 expirations. We noticed that we got like $30-something in premium coming in that you're collecting. Which one would you choose? Okay, well, if I'm collecting the premium, I want the one with the least risk, 264. Okay, if I'm paying the premium, I want the one with the most reward over here. Okay, 757. All right. So if I'm paying the premium with the one with the most reward, if I'm collecting the premium with the least risk. Makes sense? So out of those three, it ought to be pretty easy to figure out which one I want. I want that one if I'm buying. Okay. I want this one if I'm selling to collect it. All right. Now, something else to consider. Let's look at how much, I'm getting $35 on this contract. Okay. Or $33 on the contract. and $267 in risk. Well, I could go over and do 2 of these for 20 and $160 in risk and have less time till expiration. So the other lesson that you want to learn here is you also want as little time to expiration as possible. So if I can have less time to expiration and less risk, I might choose that contract. Now there is one drawback here, and that's we have a lower floor. So if we try to make that apples to apples now, and I want you to $44.90, $91 risk. So to get $30, basically say it's 10. If to 3 of them, 3 times 91 is 270. Oh, we're about at the same amount, and we have it further away. So you would have to choose. Do you want to choose do you want to go in and do this and do 3 of them, and only have an hour and 4 minutes, or do you want to do 1 of these, but have a little more time till expiration? So that's where it can get a little trickier. Generally, you want it as far away as possible, okay? Do that as far away as you can get it. And so out of all of these, if I'm collecting premium, if I'm just looking at the 44.90s, then that's what I'm going to choose. So now there are other ones on here, of course, we can look at. You got the 44.75, and notice how that premium's really big. Why is that premium so much larger? Okay? Why is the premium so much larger on that spread right here than this spread? Well, we talked about, premium is impacted by time. Okay? We talked about how premium is impacted by implied volatility, like news coming out. Premium is also impacted by how close you are to the floor or the ceiling of a contract, or in the normal vanilla option world, how close you are to the strike. Okay? In this case, the market is at 44.76, right? And the spread, the floor, is 44.75. We're only a point away, okay, or a couple points away there from the market. Now, I'm not talking about the price of the spread. I'm talking about the floor of the spread. The market itself, the indicative index, the Nasdaq. Okay, the Nasdaq is literally just a couple points off of where the floor is located. Okay? So that's like an at-the-money strike, similar to an at-the-money strike. So if the market is closer to that, the premium will be higher. You can actually get more money for less risk. That might be your chosen trade, because you can sell it and collect more premium. All right. Y'all have a great day. See you tomorrow morning on the Bull Bear Binary Hour, next week on the Diagnostic Trading Hour.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.